Hello everyone, how are you wherever you are? So my name is Kelson. So today I'm going to explain my mechanical strategy. So this is very simple and easy to understand even for a beginner. So number one is to identify the market structure. Is it a bullish market structure or bearish market structure or a consolidation? Usually I don't talk about consolidation because I don't trade consolidation. Okay, bullish market structure is whereby a market is moving to the upside, and then bearish market structure is whereby the market is moving to the downside. And then market doesn't move in a straight line, it moves in a zigzag, forming highs and lows like this. And then this is a high, it's a higher high, and this is a higher high, and what? And a higher low. Simple like this. And then on bearish market structure, we have lower highs and lower lows, and lower highs and what? And lower lows, something like this. So this is the book market structure. So I'm going to explain the real life market structure. So the real life market structure looks like this one and this one. So this is the bullish market structure whereby the market is moving to the down to the upside. So what am I looking for? This is the higher time frame. We always start to analyze charts starting from the higher time frame because higher time frame is the king. What you are what the higher time frame tells you is that's the true movement. So right now I'm on this is what you are going to see in the real life market structure. So at this moment the market is moving to the upside and it reaches a point whereby it retraces to this point and then continue with the trend, forming a break or structure right here. This confirms to us that the market is in a bullish market structure. Okay, so the only thing that can tell us that the market is in a bullish structure is the break of structure to the upside. Fine. And then this, let's go to the bearish market structure. The market is moving to the downside like this. And then it reaches a point whereby the market comes to this point, retraces to this point, and then continues to the downside, breaking the structure to the downside. This confirms to us that the market is moving to the downside. It's a bearish market structure. So right now, excellent. You confirm, you identify that the market is bullish or bearish. Then what next? What next is to identify the highest point of the daily time frame, the higher time frame. So some of the people may use 4 hour, some may use 1 hour, depends on how you trade your charts. So me usually I use 4 hour and daily time frame to identify my market direction. So on the higher time frame, what am I looking for? I'm looking for the direction of the market. Is the market bullish or bearish? That's only what I'm looking for. So right now I identify that the market is bullish, and then I want to identify my highest point. This is the highest point that causes the market to pull back to the order block, that causes the market to break the structure right here. So what happened is this point causes the market to break the structure, going to the upside. So this is the lowest point of my what? Of my daily time frame. Same as to here. The bearish market structure. Market came here and then pulled to this point and then continues with the trend. So this is the highest point that causes the market to break the structure right here. And then this is the lowest point that causes the market to pull back to this order block. Simple like that. Okay, so what next? So right now I identify the highest point and the lowest point, and then I mark them like this. This is the highest point of the day, this is the lowest point of the day, same as to bearish market structure. So the second thing I'm going to identify, I'm going to put my Fibonacci true. So I'm going to explain my Fibonacci true. On my Fibonacci tool, I put like the premium zone and the discount. On the premium zone, I'm not going to look for longs because market is expensive. And then on my discount zone, that's where I'm going to look for longs because the market is cheap. Anytime from this zone, the market is going to turn, going following the trend. Okay, simple like that. So right now I'm going to mark an order block that causes the market to break the structure. As you can see right now, this order block maybe right somewhere here causes the market to break the structure right here. So that's where I know for a fact that the market is going to pull back to this point and then continue with the trend. Simple like that. So I have high time frame and the mid time frame. So I'm going to explain the mid time frame. What am I doing on the mid time frame? On the mid time frame, I'm going to identify the internal market structure. What is internal market structure? Okay, the internal is inside the external. So this movement on the lower time frame, you're going to see high highs and higher lows. Inside here, you're going to see higher highs and higher lows. This is the internal market structure. This movement you are seeing right now, this is the internal market structure. So the internal market structure is the structure inside the external market structure. Simple like that. Okay, so I'm going to identify the internal market structure. That is it the pullback or the continuation of the trend. So what is a continuation? What is a pullback? So a continuation, we are continuing with the trend, with the highest time frame trend. So on the higher time frame, be it on the daily or on 4 hour, the market will identify that the market is in a bullish market structure. And the internal, maybe we are here right now, this is a continuation with the trend. And then this one is a pulling back. We are pulling back to the order block that causes the market to break the structure. Same as here, simple like that. So today we are only focusing on marking the internal and the external market structure. Okay, and the entry confirmation will be on another day. So I'm going to explain all these things to the chart, real chart. So this is gold. uh this is gold like daily time frame. So what am I saying right now? So the market was moving. As you can see, market is in a bearish market structure. Market came and then tried to pull back, retested, didn't break this high, and then pull back, breaking the structure right here, and then goes up and then break another structure right here. As you can see, this is a bearish market structure. The market is going to the downside. Simple like that. So I'm going to mark it very simple and understandable. So let me delete this. Okay. Okay, so right now I can see that this was the breakout structure. So how do I identify the breakout structure? This is the last point. All right, this is the last point that causes the market to go up like this. And then I'm only looking for a candle that closes below this low. That's what I want right now. So the candle closes below this low is this one, the gray candle. As you can see, there's this gray candle right here, right? Oh, this is the black candle. The black candle closes below this low. So it tells me that there was a break of structure right here. So I mark it like this, and then this one is another breakout structure. This is the last breakout structure on my daily time frame. So I identify that this one is the breakout structure on the daily time frame. Then what am I doing? So I'm going to mark the highest point that causes the market to break the structure. As you can see, the market came back here. This is the highest point that causes the market to pull back, breaking the structure right here. So right now I'm going to identify the highest point. So which one is the highest point right now? So this one is the highest point of my daily time frame. So I'm going to mark it like this, and then I'm going to mark it as the daily strong. Fine. And then what next? This is my daily low. Simple like this. This is my daily low. Simple like this. This is my daily low or daily week. So right now I identify that this is the range that I'm trading on. So right now I'm trying by all means to narrow my focus, right, from the whole area like this to this point. So right now I'm trading in this area only, right? So right now I identify my highest, my external market structure. Then what next? What next? I'm going to go down to my H4. So usually what I do is one on my daily time frame, 4 hour and 1 hour. Those are my highest time frames that I use. Daily time frame, 4 hour time frame, and 1 hour time frame. Those are my highest time frame that I use. So I just scale down right now. I identify my external market structure. So what next? I start to mark my internal market structure on my 4 hour. On my 4 hour, what am I looking for right now? I'm looking for an internal market structure. So the market, as you can see, the market was going up, forming zigzag like this, zigzag like this, zigzag like this. And then it reaches a point whereby it breaks this structure, as you can see right now. Break this structure to go down and then come back, go down, come back, go down, come back, go down, come back, and then continuously down. So right now, as you can see, the market was in a bullish market structure right now, right, pulling back to somewhere here, and then it reaches a point whereby it created a market shift, confirming to us that the market is shifting to the downside. Simple like that. So I'm going to mark the internal market structure. So I'm going to identify the highest point. As you can see, the market was moving to the upside. It reaches a point. Okay, if I may to zoom in, right now, right, the market, what happened right here? Please note that be able to identify the highs and the lows. Very careful. So this is the high, the highest point. The market tried to pull back, and then this is the highest point. The market tried to pull back to somewhere here, and then it rejected. This is the high. The market tried to pull back here. This is the high. The market tried to pull back here. This is the high. Right? Okay. So the market, what happened? The market break the structure right here. So let's mark it as simple as that. I really want my videos to be very simple for a beginner who doesn't know anything to understand what I'm trying to say right now. Okay, so what am I looking for right now? I'm marking my internal market structure. I'm marking my internal market structure. So I'm going to zoom in. I'm going to start marking my internal market structure. As you can see, market was moving to the upside. It breaks the structure right there. Okay, so this is my what? My internal market structure. And then what happened? It comes down here, and then this is the highest point. So which means if this highest point is broken, that that is a break or structure. So this one is a break or structure. So I'm just identifying the highest points. The highest points is very important. The highest point that I want. Okay, this is the highest point. The market impulsively moved to the downside and then break the structure. As you can see right now, this candle closes above this high. So which means it's a break of structure. Simple like that. And then what happened? The market tried to pull back and then continue. So is this a break of structure? No, it's not a break of structure. Why? Because these candles break didn't break this high. So what happened? This one is what we call the liquidity. The liquidity. So market try to just get the liquidity from this high, and then so which one is the last high and which one is the last low? This one is the last high which wasn't broken. This one is the last low which wasn't broken. Oh, okay, this one was broken. So I can see right now this one, as you can see, there was a market shift right here. if I may to do this, there was market shift right here. So simple like this. This is a market shift. What do you call market shift? It's a market shift is just simple like that. Market is shifting to the downside. Simple. Okay. So I'm marking my structure. Simple. Very, very simple and mechanical. So what happened? Market tried to pull up this and then go down just because there was liquidity above here. Market tried to sweep all the liquidity and then came to this point. So this was another breakout structure, right? Why didn't I put my line somewhere here? Because this candle didn't broke below this what? This low. So I'm going to put my line right here because this candle confirmed to us that this is a break of structure. Okay. Then what happened? I'm continuing marking my internal market structure. Simple. So this is a break of structure. I'm trying by all means to go slow just because I want you to understand. This is a break of structure. Simple. So this is the internal break of structure, and then this is the internal break of structure. Okay, this is the internal break of structure. Okay, and then as you can see, market was moving to the downside, and then tried to push to the upside, and then ah it didn't happen, and then it continues with the trend. So what happened? This is the break of structure, the internal break of structure. So right now we mark our internal break of structure. As you can see, I try by all means to simplify these things. So this is our highest point of our daily time frame. This is our lowest point. This is the break of structure of our daily time frame. This is our lowest point of our daily time frame. And then I mark the internal structure. This is the bullish internal. The market is moving to the downside. So this is a continuation. This is a pullback, pulling back, whereby the market is in a bullish market structure, as you can see right here. So right now, I'm trying by all means to narrow my focus to this point. To this point, mind you, we are still in our higher time frame. Okay, so this point, what am I looking for? So right now I'm identifying that this was the last 4-hour high, which wasn't broken. This high wasn't broken, guys. On the 4-hour, this high wasn't broken. I always say higher time frame is the key. So you can see like what happened right here. The market tried to pull back to this point, and then this was a liquidity sweep. The market didn't close above this high, so which confirmed to me that the market is still in a bearish market structure. But if the market break the structure right here, that was confirming to us that there was a market shift, and then the market will try to come back here, pull back, forming a high and a low, high and a low. But in this case, we are still in a bearish market structure. Simple like that. Okay, so right now we are here. I'm trying by all means to mark the order block that causes the market to 10, that causes the market to 10. So this is the order block on the 4-hour time frame. This is the order block that causes the market to 10 to the downside. So as you can see right now, I'm narrowing my focus from all this to this. That's the idea of this strategy, guys. So I'm doing the same thing again that I did on the daily time frame. On the 4-hour, I identified the higher time frame, the highest point of my 4-hour, and this is the lowest point of my 4-hour, right? And then on my 4-hour, this is the break of structure. Okay, fine. Then what am I doing? I'm going to scale down to my 1 hour. So on my 1 hour, what am I looking for? I'm going to mark again the internal market structure. Okay, simple. Which one is the internal market structure? As you can see, market was moving to the downside. Okay, let me try to draw it so that you can see clearly. Market was moving to the downside, try to pull back, downside, try to pull back, downside, try to pull back, downside, try to pull back here, and then downside. So as you can see right now, the market reaches a point whereby it created to us a market shift. As you can see, this is a 1 hour candle there, guys, that tries to pull back. This is a 1 hour candle that tries to pull back. So this is on the lower time frame. You can see that that one is a high. So this is a high which was broken. So as you can see, this high created to us a market shift. So I'm going to put it as a market shift. The market is shifting, pulling back to the older block. Okay, so what happened? I'm going to mark again the breakout structure. This is a breakout structure, as you can see. Okay, this is a gap. Okay, but it's a breakout structure to the upside. Okay, breakout, internal breakout structure. So as you can see, guys, the market came here and then pushed to the upside, tried to come back, push to the upside, try to come back here, push to the upside, try to come back, try to do this and then push to the upside. But this one on the high time frame is a liquidity. So this is a liquidity which was formed, and then the market created to us a market shift. Simple like that. So let's mark it again. We are going to mark this one in a simple manner so that that person, that one guy who is new in the market will understand very clear. So this one is, you can go, okay, for it to be clear, let me go on my mid time frame. So M15 and M30, this is my mid time frame. So let me go on my M30. On my M30, I can see that this is a breakout structure. Okay, this is a breakout structure. Okay, let me do this internal breakout structure. Okay, I'm just continuing marking my breakout structures. This is a breakout structure. Okay, breakout structure. And then what happened? The market came back here. Okay, came back here. Do this one on my 15-minute time frame. Let me do this. It's a breakout structure, right? On my 30 minutes time frame, and then this is the lowest point that causes the breakout structure right here. So which means there was a market shift to the downside. There was a market shift to the downside. Simple like that, guys. Simple like that. There was a market shift to the downside. Let me do it like market shift. Okay, so right now, which one is the highest point? Which one is the lowest point? So as you can see, right now, market reaches to this point, created a market shift, and then pull back to this point, come back, created to us a break or structure right here. So this one is the new high, this one is the what? New low at the moment. So let's mark it very simple and mechanical. Very simple and mechanical. Very simple. So as you can see right now, this is our breakout structure. However, as you can see, this candle closes below this low. So this confirmed to us that this one is a market shift. This one is a break of structure. So I'm going to identify the last high. So this one is the last high that causes the market to break this structure. I'm on my M30, guys. I'm on my M30. So on my M30, I can see that this is the highest point of M30, and then at the moment this is the lowest point of M30. Fine. So I narrow my focus. I'm trying by all means to narrow my focus from all this to this. So right now on my M30 right now, I can see that right now I'm here. That's where I am right now. So this is a breakout structure that confirmed to us that the market is moving to the downside. Number one. Number two, this is the highest point, right? That causes the break of structure right here. This is the lowest point. So right now we are not yet in the pulling back. Why? Because as you can see in the internal structure of the 15 minutes time frame, the market came here, tried to go up, come here, go up, come back here, go up, come back here, go up, come back here. So when the market comes here, breaking the structure, retested to this zone, right? I know for a fact that the market is trying to pull back to the order block, which causes what? The market to break the structure. So what am I doing right now? What am I doing right now? I'm going from my M to my last middle time frame, which is M30. M30 to to mark my internal market structure again. Again, I this is my last middle time frame where I mark my middle time frame for the last time. So as you can see, market was pushing to the upside, and then it created to us a market shift right here. Okay, and then this is a market shift inside the M30, inside the M30. Guys, don't be confused. And then this is a breakout structure. Okay, breakout structure. This, and as you can see, market was pushing and then try to delete darling right now, and then finally break the structure right here. So it breaks the structure, and then again market reaches to this point, try to push to the upside and then come back here. So which means this one is the what? Is the breakout structure, internal breakout structure. So as you can see, this is the last breakout structure inside the 30 minutes time frame. So right now I can see that this one is my last high on my 15 minutes time frame. This one is the last high on my 15 minutes time frame. Last high on my 15 minutes time frame. This one is my last low on my 15 minutes time frame. So what am I waiting for? This one is the candle that causes the market to what? This one is the candle that causes the market to break the structure right here. So I'm waiting for the market to come back right here, right, and continue with the trend. But if this if this order block fails, I'm looking for something like this. If this order block fails and the market break the structure, I know for a fact that the market is going to pull back to the order block on the M30 that causes the market to break the structure right here. So if the order block, if this high is broken, then the market come back here, retest. I'm going to know for a fact that the market is going to retest to the order block, which is right here. That causes the market to break the structure right here and continue with the trend. Simple like that. So this is how I mark my charts from the higher time frame to the lower time frame. So what am I doing? I'm just trying by all means to narrow my focus, having the data that can confirm to me that when I'm going to place a trade, I'm very sure and confident with my strategy. So the message for today is have a strategy. Try by all means to complete 100 trades. 100 trades. Journal the trades, trade with precision, follow your rules, follow your risk management. I'm telling you guys, it's going to work. It's going to work if you follow your rules. Write somewhere your rules that you are going to follow, and then try by all means to obey those rules, because those rules are the ones that makes you profitable and consistent. So guys, thank you. Have a good time and have a good day and night wherever you are. Thank you.